Hello and welcome back to this channel. 4 golden inside bar trading strategy you never ignore. This video will enhance your inside bar trading knowledge to the next level. I'm going to share with you 4 golden inside bar trading strategies you should never ignore if you understand it properly. But before I talk about that, I would like to show you what is an inside bar. How does it look like? What is the real characteristics of an inside bar? What message an inside bar convey to traders? And finally, why it is so important to use them in our trading setup. What is an inside bar? Inside bar has always been one of my favorite candlestick chart pattern to place a trade. Inside bar pattern can be a very useful and powerful price action signal if you understand how to trade it properly. It consists of at least 2 candlestick formation. The first one is called the mother bar, which could be bullish or bearish, and the second one is called the inside bar. In this pattern, the high of the inside bar should be lower than the high of the mother bar, and the low of the inside bar should be higher than the low of the mother bar. In other words, the mother bar engulfs the inside bar. Mother bar and inside bar could be bullish or bearish, like this, as you can see in this graph. Although mother bar is only referred to one candle, but whereas the inside bar could be 1, 2, 3, 4 or more candles that are all engulfed by the mother bar. Inside bar can give you so many useful trading information and clues to make the right decision for your trading setup, such as reduce volatility, consolidation in the market, indecision, or pause in the market. These clues can tell you that what the market is going to do next, or watch for a strong breakout is on the way to enter the trade. It can help you to better time your entry with low risk. It can also be used with the trend or market reversal. Inside bar can also be seen as large range big body, large range small body, and small body small range. Inside bar with large range big body. In this graph, we have the inside bar with large range. You see the range from the high to low. From the high to low of the inside bar is large compared to the high and low of the mother bar. The same thing here. And also the body are big compared to the mother bar. It signifies an indecision or a market reversal depend on the close of the inside bar. If the inside bar closes with bullish, it shows a sign of strength, signifying the bulls are in control of the market. And if the inside bar closes with bearish, like here or like here, it shows a sign of weakness, signifying the bears are in control of the market. You can also blend these 2 candles with candlestick matte blending, and you will find the same characteristics. You will find a big hammer or shooting star, signifying the bulls or the bears are in control of the market. Inside bar with large range small body. Now in this graph you see the range are large. The range of inside bar are large compared to the mother bar, whereas this is it, the range are big compared to the mother bar, whereas the body are very small compared to the mother bar. It signify low volatility and indecision and or pause in the market. Now, the last one is inside bar with a small body, small range. Now, in this graph, you see the range of the inside bar. The range are very small compared to the body, the range of the inside of the mother bar. You see the range are small compared to the mother bar, and also the body of the inside bar is very small compared to the body of the mother bar. It signifies indecision or market reversal. But again, since we have a low volatility and indecision, a big and strong market breakout is expected. How to enter the trade with an inside bar? This is Air Canada stock D1 time frame of finance. In this graph, I want to show you the psychology behind an inside bar at the top of an uptrend or at the bottom of a downtrend. Look at this inside bar. It characterized as indecision, low volatility, and no momentum in the market. The bulls and the bears are in the standoff. Traders should be prepared for a strong breakout. Now, look at this next bullish candle that closes above the high of this mother bar, showing the bulls have gained momentum and strength and a probable sign of an explosive breakout. Here, you can enter the trade right there or go long as soon as you see this bullish candle passes the high of this mother bar, and you can put your stop loss maybe 1 or 2 ATR below the low of this mother bar. Some traders, they enter the market as soon as the next bullish candle passes the high of the inside bar and put their stop loss below the low of the inside bar. Well, I don't recommend this because of the false breakout. After this, you see a sign of strength. A sign of strength and momentum by looking at each candle. By looking at each candle closes above the previous one. For example, this candle closes above the previous one. This candle closes above the previous one. And also even the last candle closes above the previous one. This trend is strongly going up till you see the formation of another inside bar near the top of an uptrend. This inside bar is telling you the uptrend is slowing down and market has contracted, which may result in trend reversal, as you see. So traders should be prepared to exit the market as soon as you see the next candle going down lower than the low of the mother bar, and put their stop loss 1 or 2 ATR above the high of the mother bar. After this, You see the trend is going down strongly all the way. So this is the psychology of the inside bar formation at the top of an uptrend or at the bottom of a downtrend. Now that we are familiar with inside bar, let's try our first golden trading strategy, which is double inside bar pattern. Double inside bar pattern consists of two inside bars that the range and shadows are contained within the structure of the mother bar. It signifies prolonged period of indecision, lack of volatility, and pause in the market. There is not a clear winner between the bulls and the bears battle. The inside bar shows a lack of enthusiasm of price to move above or below the previous candles. This means the market is shrinking and becoming tighter and tighter, and sooner or later it is going to release and generate the strong momentum and turn into an explosive move. That is the golden opportunity for traders to catch a big trade. To enter the trade, we need momentum. We need to have a strong imbalance between buyers and sellers to break the short-term support or resistance of an inside candles. I'm also going to show you where you trade the double inside bar. The first one is where the trend break out the consolidation period. This way you have momentum and you can have the best opportunity to enter the trade. Second, when price is respecting the short-term moving average, like SMA 10, this way, again, you have momentum and the inside bar is powerful to enter the trade. Third, trade it as continuation or reversal pattern. Since this pattern is very powerful in a strong uptrend or downtrend, and also it is strong and powerful at the major support or resistance levels. Finally, never trade an inside bar when you see the trend is in the range, because you will find the trend mostly in choppy fashion and it is wasting time and money. Let's have an example. Double inside bar to catch the reversal. This is the price trend, K-stock D1 time frame. In this graph, you see the price is trending upward nicely, and after a pullback close to a major resistance level, you see a formation of double inside bar, which is a sign of uptrend is slowing down. This uptrend is slowing down and contracted, which may result market reversal. Now some traders trade the inside bar near resistance like this, exit the market and at this point and put their stop loss maybe 1 or 2 ATR above the resistance. I personally do not like this idea due to false breakout or fakey pattern, and also since the buyers are still in control of the market, the price may break out the resistance here and continue going higher and hit your stop loss and kick you out of the trade. Therefore, the best approach is, since you are near reversal, near resistance, wait for the price to make the reversal move first and then form an inside bar like this. Now you can go short safely as soon as the next candle going lower than the low of the mother bar, and then put your stop loss maybe 1 or 2 ATR above the high of the mother bar. You see after this the price is dropping down considerably, all the way down. So this is how you approach an inside bar near reversal. The second golden inside bar trading strategy is quelling inside bar candlestick pattern. Quelling inside bar consists of two or more inside bar, which each of them contain within the high and low of prior candle, or quelling up tighter and tighter like a spring within one another. When the inside bar is more than two, it would visibly like a kind of consolidation pattern. You see, it looks like a consolidation pattern. Or the price fluctuation become smaller and smaller until it becomes flat. Which exactly like a contracted spring wound up tighter and tighter, and eventually if it released, it would have an explosive breakout and turn into a powerful move. To enter the trade, we draw two horizontal lines from the high and the low of the mother bar. Now, if the next candle after these two inside bar, if the next candle, which this bullish candle, passes the high of the mother bar, we can enter the trade right here and put our stop loss 1 or 2 ATR below the low of the mother bar. So this is they call quelling inside bar bullish entry. Now, if the next candle after the two inside bar passes the low or go down lower than the low of the mother bar, then we can enter the trade here or go short here and put our stop loss 1 or 2 ATR above the high of this mother bar. So this is how you can enter or exit the market using quelling inside bar pattern. Let's have a real example to clarify the strategy. Example number 1, quelling inside bar often lead to an explosive breakout. This is BLDP stock D1 time frame Yahoo Finance. As I explained earlier, the quelling inside bar is a strong and powerful pattern showing the volatility is diminishing and basically no strong fluctuation and indecision between buyers and sellers, which this could be a sign of a market reversal. This phenomenon is obvious when the trend is near top or bottom of a trend. Therefore, traders should be prepared for entry setup. In this graph, you see a quelling inside bar at the bottom of a downtrend. And as you see from the next bullish candle right here, the buyers are gaining momentum and would like to push the price higher. So as soon as this bullish candle passes the high of the mother bar, you can enter the trade right here or go long here and put your stop loss 1 or 2 ATR maybe below the low of the mother bar. So after this, you see the trend is trending higher and higher. So you have a massive breakout. This is the correct way you enter the trade using quelling inside bar. Example number 2, quelling inside bar often lead to an explosive breakout. This is the price trend, Walmart stock, D1 time frame Yahoo Finance. In this graph, you see a quelling inside bar right here, the best way to enter the trade is wait for the next candle to pass the high of the mother bar. This is the next candle, and around this area is going to pass the high of the mother bar. So you can enter the trade right here and put your stop loss maybe 1 or 2 ATR below the low of the mother bar. So after the entry, you see the trend have an explosive breakout and heading higher. Some traders use the high and the low of an inside bar to enter the trade, but they increase their risk due to false breakout and fakey pattern. So I suggest to use the high and the low of the mother bar for entry. The third golden inside bar trading strategy is how to trade the multiple inside bar pattern. This is the price trend K-Stock D1 time frame Yahoo Finance. In this graph, I'm going to show you the simplest method to trade an inside bar combo or multiple inside bar. Most traders use the high and the low of an inside bar as an indication to enter or exit the trade and use them to put their stop loss. For example, in this multiple inside bar, so since the market consolidate for several days and the volatility constantly decreasing, as you see, therefore it is a strong sign the market is about to make a big move. Some traders, they enter the market as soon as the next candle, this bullish candle, passes the high of an inside bar, and then they put their stop loss below the low of an inside bar. So they enter the market here and they put their stop loss right there. I'm going to show you another multiple inside bar at the top of an uptrend. So you see the market is reversing. So traders, they attempt to exit the trade as soon as the next candle, this bearish candle, passes the low of this inside bar, and then they put their stop loss above the high of this inside bar here. So they exit the market here and they put their stop loss right there. I personally do not like this approach since they are not protected by the patterns such as false breakout or high kite pattern, which is a variation of inside bar. Also there is no room for the trend to breathe, and you may be kicked out of the trend of the trade permanently. The best way to enter the trade using the high and a low of a mother bar. Right here, high and a low of a mother bar. Or if they want to use the high of an inside bar, or for example here, the low of this inside bar, then when they put their stop loss, they should put their stop loss 1 or 2 ATR above the high of this inside bar for bearish, and they put maybe 1 or 2 ATR below the low of this inside bar for bullish. So this is the best way to trade a multiple inside bar pattern. Finally, the fourth golden trading strategy is the bullish and bearish Hikaki pattern. Hikaki pattern was first developed by Daniel L. Cheslin in the year 2003. The pattern has two different setups. The first one is the short-term uptrend setup, and the second one is the short-term downtrend setup in price. The bullish Hikaki pattern occurs more frequent than the bearish one, and it's a reliable trend reversal pattern. Bullish Hikaki pattern consists of a harami pattern or an inside bar. This is an inside bar or this is a mother bar. A false to a downside decrease in volatility, followed by a reversal move with a breakout, the Harami pattern's high or the high of an inside bar. It doesn't require a specific type of a trend, and the candle color doesn't matter. A Hikaki pattern in a downswing indicate a bullish reversal. That's a bullish reversal here. Whereas in an upswing, it indicates a continuation pattern. To trade the bullish Hikaki pattern, wait for this bullish candle passes the high of an inside bar, and then you place a buy stop order right here, and immediately you put your stop loss the lowest place in the Hikaki pattern, which is right here. And your profit target should be your next resistance, wherever is around this area B, or 2-to-1 reward risk ratio. That's how you place a trade in bullish Hikaki pattern. Example, how to trade the bullish Hikaki pattern. This is the price trend, Microsoft stock, M30 time frame Yahoo Finance. In this graph, you see the bullish Hikaki pattern, which illustrates the same concept of the short-term decrease in market volatility. This pattern consists of a Harami pattern. This is the Harami pattern, or an inside bar. This is an inside bar and this is the mother bar. A fake to downside decrease. You see a downside decrease in volatility followed by reversal. With a breakout, the Harami pattern's high or an inside bar high. As soon as the pattern break an inside bar high, you can enter the trade right there and put your stop loss. The lowest point in Hikaki pattern. That's how you place a trade in bullish Hikaki pattern. Example number 2, how to trade the bearish Hikaki pattern. This is Tesla stock, H1 time frame Yahoo Finance. In this graph, you see the bearish Hikaki pattern, which consists of the Harami pattern, which is an inside bar. You see this is inside bar, and that's the mother bar. A fake to upside decrease in volatility, followed by the reversal move. With a break out the low of the inside bar. This bearish candle break the low of this inside bar. So as soon as this bearish candle and or this price drop down and break the low of this inside bar, you can exit the market right there and put your stop loss 1 or 2 ATR above the high of the Hikaki pattern. So that's how you trade the bearish Hikaki pattern. I hope you enjoyed this video. Wish all of you good luck, and don't forget to smash the subscriber button. If you like this video, thumbs up and subscribe. Thanks for watching. Take care and see you next time.